This is Rohan. He started a small cafe during lockdown, a dream he had nurtured for years. He worked hard, invested all his savings and finally made profits. But one morning he received a notice from the income tax department. Then came a GST summon and soon after a penalty letter from the local authorities. In just 8 months, the dream that took him years to build began collapsing, not because of competition but because of compliance mistakes. If you own a small business or plan to start one, this story will save you lakhs, peace of mind and possibly your business itself. Mistake number 1. Operating without proper registration. Rohan's first mistake. He never registered his business. He thought, why bother with Udyam or GST when I am just starting out? But here is what most small businesses do not realize. Without registration, you are not legally recognized. You cannot claim input tax credit under GST or benefits under MSME laws. When Rohan's supplier overcharged GST, he could not claim credit. That single mistake cost him Rs 2.4 lakhs in tax input he could have easily saved. The government's MSME data shows over 65% of small businesses in India still operate unregistered. They don't just lose tax benefits, they lose access to loans, subsidies and legal protection. Solution: register your business under Udyam, GST and Shop and Establishment Act. In less than 15 minutes, you create a legal identity that protects you and your brand. Mistake number 2. Not maintaining proper books of accounts. The second mistake most entrepreneurs make is not maintaining proper books of accounts. They think we will handle taxes at year end. But that mindset is like saying, I will start swimming when I am drowning. When Rohan applied for a loan, the bank asked for ITR, balance sheet, GST returns. He had none. The loan got rejected. Even under Income Tax Act, Section 44AA, every business must maintain books if turnover crosses 25 lakhs of rupees. And under Section 44AB, if turnover exceeds rupees 1 crore, audit becomes mandatory. Solution: simple accounting software or even Excel, but record everything. Because in business, memory fades, but entries don't. Mistake number 3. Mixing personal and business finance. Now this one is the silent killer. Rohan often used his personal bank account for business. Small payments, vendor transfer, even client receipt. At first it seemed convenient. But during scrutiny, the assessing officer asked, if this is your personal account, how do we know these transactions are business related? He could not justify them. The officer treated Rs 8 lakh worth of credit as unexplained income under Section 68 of the Income Tax Act. This single mistake created a tax liability of Rs 2,20,000 plus penalties. Solution: never mix finance. Open a separate current account and pay yourself a fixed salary. Remember, clarity in accounts is protection in audits. Mistake number 4. Ignoring GST compliance. This one is big. Rohan's cafe had crossed Rs 25 lakh turnover, but he never registered under GST. He thought, I will do it later. When the department found out, they levied penalties under Section 122 of the CGST Act for failure to obtain registration and failure to issue tax invoice. Rs 1,50,000 penalty plus interest. And worse, he could not collect GST retroactively. Even if you earn income through Instagram stories, freelancing or side business, you are liable for GST once you cross Rs 20 lakh, Rs 10 lakh in some states. Solution: file your GST returns monthly or quarterly through GSTR 1 and 3B. Once done, you can claim input tax credit, legally reduce your tax and avoid penalties. Mistake number 5. Not paying advance tax. Now this one is less known but equally damaging. If your total tax liability exceeds Rs 10,000 in a year, you must pay advance tax under Section 208 of the Income Tax Act. Rohan filed his returns late, thinking he could pay at once. He did not realize he had owed interest under Section 234B and 234C. For every quarter's delay, he paid extra, a total of Rs 18,000 just as interest. All because he did not divide his tax into 4 parts across the year. Solution: mark this date: June 15, September 15, December 15 and March 15. Pay your tax in installments. It is not just legal, it is smart cash flow management. Mistake number 6. No legal agreement or documentation. This is the invisible trap. Rohan hired a chef verbally, no written contract. Months later, the chef left and opened a similar cafe next door. No confidentiality clause, no non-compete, no proof of employment. He could not take legal action. Even a simple employment agreement or vendor contract protects you under the Indian Contract Act of 1872. Solution: document everything: partnership dates, invoices, NDAs, MOUs. Because in law, what is not written does not exist. Mistake number 7. Ignoring TDS and payroll compliance. Rohan's cafe employed 5 staff. He paid salaries but never deducted TDS under section 192. He did not know that failing to deposit TDS makes him liable under section 276B, a punishable offence. A simple oversight could have led to prosecution. Yes, jail term up to 7 years for non-payment of TDS after deduction. Solution: fill your TDS returns, Form 24Q, 26Q quarterly. Pay within the due date. Remember, paying salaries in cash above Rs 10,000 is non-deductible. Mistake number 8. No business insurance or contingency planning. One fine night, an electrical short circuit gutted half of Rohan's cafe. No insurance, backup funds. In one moment, years of effort vanished. He was not just financially hit, emotionally too. He had to shut down for 2 months, losing over Rs 4 lakh in sales. Premium for fire, theft or business interruption insurance is tax deductible under section 37(1) and most people do not claim it. Solution: always protect your business assets not just physically but financially, because in business recovery is easier when you are covered. Today Rohan runs his cafe again, smarter, compliant and calm. He learned that building a business is not about money, it's about discipline. Here is what he told me. I wish someone had told me that law is not for lawyers, it is for business owners like me. And that is exactly why I made this video. So that your story does not end in penalties, notices or shutdown. If you found this valuable, share it with one business owner you know. Because the biggest mistake is not breaking the law, it is not knowing it.